Welcome to the Deep Dive. Today we're going to be examining excerpts from William Engdahl's Gods of Money, Wall Street, and the Death of the American Century.
It's a fascinating book.
It is. It's a dense book.
Gary.
It delves into a really complex subject,
Yeah.
the history of money and power in America.
Yeah, Engdahl really challenges a lot of conventional narratives.
He does.
He argues that a select group of very influential banking families have really shaped American economic and foreign policy for their own benefit. And he particularly points the finger at Wall Street.
Yeah. So today our goal is to really unpack Engdahl's analysis, and we're going to try to separate fact from speculation, and we're going to highlight the key insights from his research.
Sounds good.
All right. So Engdahl starts by examining early American banking, particularly the first and second banks of the United States.
Right. And these banks, although they were called national banks, they were mostly privately owned.
Right.
And there was even significant investment from figures like Nathan Rothschild, who at the time was the world's most powerful banker.
Really? So even back then, there was this idea that there was some kind of outside influence.
Exactly. Engdahl argues that this involvement from figures like Rothschild was seen by many as a continuation of British influence over the American economy.
Interesting. So even after independence.
Yeah. Even after independence, that's what made people nervous about it.
Wow.
And Engdahl highlights figures like Thomas Jefferson and Andrew Jackson who opposed these early national banks.
Right.
Because they were champions of democratic principles over centralized financial power.
They didn't want somebody else controlling their money.
Exactly.
Interesting. And then Engdahl turns his attention to J.P. Morgan.
Oh, yes, J.P. Morgan.
And he labels him as America's first god of money.
It's an apt title for him.
I think so.
Yeah.
He was such a towering figure in American finance. And Engdahl claims that his influence went way beyond just being a financier.
Oh,
He
absolutely.
was instrumental in events like the Panic of 1893 and 1907.
That's right. And Engdahl argues that these crises weren't just unfortunate events, they were deliberately engineered by Morgan and his associates
Oh, well. To what end?
to consolidate their own power and to pave the way for the creation of the Federal Reserve.
So they created the problem and then they provided the solution.
Exactly. Engdahl claims that Morgan actually exploited these crises to gain control of America's gold reserves, which was a crucial step in establishing a central bank.
Wow, this is all starting to sound a little bit conspiratorial.
Well, it is a controversial book,
It is.
but Engdahl does present some compelling evidence.
Let's talk about his account of the creation of the Federal Reserve,
Okay,
because this is where it gets really interesting.
it does.
He describes a secret meeting on Jekyll Island, where this select group of bankers, including Paul Warburg and Nelson Aldrich, drafted the Federal Reserve Act.
It sounds like something out of a movie.
It does. It sounds very cloak and dagger.
Right, and Engdahl argues that the true nature and the purpose of the Federal Reserve was deliberately obscured.
So what was the purpose?
Well, he believes that it was to centralize financial power in the hands of a select few. And it wasn't really a decentralized institution. It was presented that way.
Right.
But ultimately, it served to transfer the power to create and control money from Congress to a private cartel of banks.
So it gave these bankers an incredible amount of power.
Exactly.
And then we get to World War I.
Okay.
And Engdahl explores the role of Wall Street, particularly J.P. Morgan and Company, in financing the Allied war effort.
Yeah, they were essentially acting as bankers for Britain and France.
Interesting. And how did that affect U.S. neutrality?
Well, that's the problem. Engdahl claims that their actions potentially compromised U.S. neutrality because they had a vested interest in an Allied victory.
So they were playing both sides.
Essentially, yes.
Interesting.
Engdahl suggests that the Wilson administration was actually influenced by these financial interests to enter the war.
Wow, to help their buddies out.
Yeah, to protect their investments.
So he's saying that the U.S. entered World War I not for idealistic reasons, but for financial gain.
That's what Engdahl is arguing.
That's a pretty bold claim.
It is. And to bolster his claim, Engdahl highlights the role of the Committee on Public Information, or the CPI, and the use of propaganda to sway public opinion.
Okay.
This is where Edward Bernays comes in.
Oh, yeah, Bernays.
Yeah, he was a nephew of Sigmund Freud, and Engdahl describes how Bernays used psychological principles to manipulate public perception.
So he was kind of like the father of spin.
You could say that he was very influential in shaping the narrative in favor of U.S. involvement in the war.
Interesting. And then we move into the interwar period,
Right.
and Engdahl analyzes the role of Wall Street loans in rebuilding Europe after the war.
Right. Those loans seemed benevolent at the time.
Right, on the surface they did.
Yeah, but Engdahl argues that they actually fueled unsustainable economic growth, which contributed to the Wall Street crash of 1929.
So they were setting themselves up for failure.
In a way, yes, Engdahl points to the gold exchange standard, which was established in the 1920s as a key factor in the instability that led to the crash.
So how did the gold exchange standard work?
Well, the U.S. dollar was pegged to gold,
Right.
and other currencies were pegged to the dollar.
Right.
But the stability of the whole system relied on the U.S. maintaining sufficient gold reserves.
So it was a house of cards.
Essentially, yes.
And then the Credit-Install Bank in Vienna collapsed in 1931.
Right.
And that triggered a chain reaction.
It did. It led to a global financial meltdown.
Yeah.
And Engdahl uses this event to highlight the fragility and the interconnectedness of the international financial system.
It all came crashing down.
It did.
So he's saying that the 1929 crash wasn't just about market speculation.
Yeah.
It was a systemic failure,
Exactly.
rooted in the flaws of the gold exchange standard and the lending practices of Wall Street banks.
That's right. They were all connected.
So it was just a matter of time before it all fell apart.
It seems that way.
Wow. So the Great Depression marked a major turning point in American finance, according to Engdahl.
It did.
And he argues that the decline of the House of Morgan after the crash created an opening for the rise of the Rockefellers.
For Rockefellers, they become the dominant force in American finance.
Interesting. So we've gone from Rothschild to Morgan to Rockefeller.
It's a fascinating lineage of financial power.
It is. So what did the Rockefellers do differently?
Well, Engdahl highlights their influence on Franklin D. Roosevelt's New Deal policies,
Okay.
particularly through figures like Harry Hopkins, who was a key advisor to FDR and allegedly had close ties to the Rockefellers.
Interesting. And what was their agenda?
Engdahl suggests that the Rockefellers' agenda was different from the Morgans. They shifted the focus from international finance to domestic control,
Ah.
especially in the oil, chemical, and military-industrial sectors.
Okay, so they were looking inward rather than outward.
In a way, yes.
And Engdahl presents this really unsettling analysis of the Rockefellers' policies during this period.
Right.
He claims that they simultaneously supported the Council on Foreign Relations War and Peace Studies, which aimed at U.S. global dominance. But they also provided financial and material support to Nazi Germany through their various business interests.
Yeah, it seems contradictory.
It does.
But Engdahl argues that their actions weren't driven by ideology, but by this calculated pursuit of power and profit.
So they were playing a very dangerous game.
Engdahl suggests that the Rockefellers were trying to weaken both Germany and the Soviet Union.
So they could come out on top.
Exactly. They were paving the way for American hegemony.
Wow. This is all starting to make sense in a scary kind of way.
It's a lot to take in.
Heck is.
Mm.
So to understand the Rockefeller strategy, Engdahl introduces these geopolitical thinkers like Nicholas Beichmann and Isaiah Bowman,
Oh, yeah.
who influenced the Rockefeller worldview.
Right. Their focus was on controlling the Rimland, the coastal areas surrounding the Eurasian heartland.
Right.
And this contrasted with the traditional British focus on controlling the sea lanes.
Interesting.
Yeah, it was a different approach to global power.
Okay. And then World War II comes along.
Right.
And Engdahl claims that the Rockefellers used their influence to shape the post-war order to ensure American dominance.
That makes sense.
Right. And he points to the Bretton Woods Agreement of 1944, which established the U.S. dollar as the world's reserve currency.
Right. That was a pivotal moment.
It was.
It gave the U.S. incredible control over global trade and finance.
Right. And Engdahl claims that Nelson Rockefeller was actually instrumental in securing Latin American support for Bretton Woods.
He used his political connections and his economic influence to sway their votes.
Interesting.
So the U.S. really solidified its position as the dominant global power after World War II.
Right. And then the Cold War emerges.
Right.
And in Engdahl's view, the Cold War was a continuation of this pursuit of power.
He argues that the U.S. used its economic and military might to contain the Soviet Union and to maintain its global hegemony.
So they were constantly trying to expand their influence.
Yeah, Engdahl provides numerous examples of U.S. intervention in other countries,
Really?
often through covert operations by the CIA,
Oh, wow. To what end?
to install pro-American regimes
Ah.
and to suppress any threats to American dominance.
So they were trying to control the world.
Essentially, yes.
Hey, this is all pretty heavy stuff.
It is.
It's making me look at history in a whole new light.
That's what Engdahl wants you to do. He
Yeah.
wants you to question the narratives that you've been told.
Right. To think critically about the role of money and power in shaping the world.
Exactly. And this shift away from the gold standard, it really gave Wall Street banks an incredible amount of power.
How so?
Well, they could create dollars without being limited by gold reserves.
So basically they could print money.
Essentially, yes. And Engdahl argues that this contributed to the inflationary pressures of the 1970s.
That makes sense.
Uh,
So more dollars in circulation means each dollar is worth less.
exactly. And then you have the 1973 oil crisis.
Ah, yes. The oil crisis.
Engdahl suggests that it wasn't simply a result of market forces.
Oh, really?
He believes that it was orchestrated
By who?
by U.S. policymakers
Really?
in collusion with Saudi Arabia
And why would they do that?
to bolster the weakening dollar through the petrodollar system.
The petrodollar system.
Yeah, it's a system where oil is priced exclusively in U.S. dollars.
Interesting. So that would create more demand for dollars.
Exactly, because countries that needed to buy oil would have to buy dollars first.
So it would prop up the value of the dollar, even though it wasn't tied to gold anymore.
Right. And then you have the rise of the eurodollar market.
The eurodollar.
Yeah, it's a vast pool of U.S. dollars that are held outside of the U.S. banking system.
Oh, wow. So it's like a shadow banking system.
In a way, yes. And
Yeah.
it's completely unregulated.
Yikes. That sounds dangerous.
It is. Engdahl argues that this unregulated market, fueled by petrodollars and other capital flows, contributed to global inflation and financial instability.
Because it was increasing the global supply of dollars without any real assets to back them up.
Exactly.
So it was all smoke and mirrors.
In a way, yes. And then we move into the 1980s and the Reagan era.
Okay, the era of deregulation.
Exactly. And Engdahl analyzes the consequences of Paul Volcker's monetary policies.
Volcker, he was the chairman of the Federal Reserve.
That's right. And he implemented these really drastic interest rate hikes.
The curb inflation.
Yeah. But they also triggered a severe recession in the U.S.
So it was a trade-off.
It was. And Engdahl argues that these policies had a particularly harsh impact on developing countries.
Really?
Yeah. It led to the Latin American debt crisis.
Ah, yes. Because they had all this debt denominated in U.S. dollars.
Exactly. And as interest rates soared, they couldn't afford to make their payments.
So it was a massive transfer of wealth from these countries to U.S. banks.
Exactly.
Wow. It's amazing how these events are all interconnected.
They are. Engdahl does a great job of tracing these connections throughout history.
So this period also saw a significant deregulation of the U.S. financial system.
It did. And this deregulation, combined with Volcker's high interest rates, created the perfect conditions for the savings and loan crisis.
Oh, right. The S&L crisis.
It was a disaster. It cost U.S. taxpayers billions of dollars.
And Engdahl blames this on deregulation.
He does. He argues that it allowed for all sorts of risky lending practices and speculation.
And then Alan Greenspan takes over as Fed chairman.
Right. And he continues this trend of deregulation,
It all culminates in the repeal of the Glass-Steagall Act in 1999.
which had separated commercial banking from investment banking.
Right.
Engdahl argues that this repeal was a huge mistake.
Because it blurred the lines between traditional lending and riskier investment activities.
Exactly. And he sees it as setting the stage for the excessive risk-taking that led to the 2008 financial crisis.
So Greenspan basically unleashed the beast.
You could say that.
Interesting. So Engdahl is very critical of Greenspan's belief in self-regulating markets.
He is. He argues that it blinded Greenspan to the dangers of the emerging housing bubble.
And the excessive leverage that was building up within the financial system.
Right. He was asleep at the wheel.
And then we get to the 2000s and the emergence of these really complex financial instruments like mortgage-backed securities and collateralized debt obligations.
CDOs, right? They were essentially bundles of mortgage-backed securities.
And they were sliced and diced and sold to investors all over the world.
Many of whom had no idea what they were buying.
And Engdahl argues that these instruments, based on flawed risk models and fueled by cheap credit, led to the creation of a massive housing bubble.
Exactly. And he points to the role of the credit rating agencies.
Like Moody's and Standard & Poor's.
Right. They were giving AAA ratings to these CDOs even though they were incredibly risky.
So they were complicit in the whole scheme.
Engdahl believes so. He argues that they had a conflict of interest because they were being paid by the banks that were issuing these securities.
So they were basically rubber stamping whatever the banks wanted.
Essentially, yes.
And then you have the monoline insurance industry,
Right.
which was providing guarantees against default on these CDOs.
Yeah. But they didn't have enough capital to cover their obligations when the crisis hit.
So it was a house of cards built on a foundation of sand.
That's a good analogy.
And Engdahl is particularly critical of the predatory lenders who were targeting low-income borrowers.
Right. They were offering them mortgages that they could never afford to repay.
And then these mortgages were bundled into securities and sold off to investors.
So the risk was transferred from the lenders to the wider financial system.
And Engdahl blames the government regulators for not doing enough to prevent this.
Especially the Federal Reserve under Alan Greenspan.
Right. He was still clinging to his belief in self-regulating markets.
And it all came crashing down in 2008.
When Lehman Brothers collapsed,
It was a pivotal moment.
it sent shockwaves through the entire financial system.
And it threatened the global economy.
And then the government had to step in and bail out the banks.
Right. They used taxpayer money to prevent a complete meltdown.
But Engdahl argues that these bailouts just rewarded the institutions that caused the crisis.
And they didn't address the underlying problems.
So it's just a Band-Aid solution.
Exactly. And then the Federal Reserve started these massive quantitative easing programs.
Pumping trillions of dollars into the financial system.
Right. But Engdahl argues that this did little to stimulate the real economy.
It just inflated asset bubbles in stocks and bonds.
And it exacerbated the wealth gap.
So the rich got richer and the poor got poorer.
Essentially, yes. And Engdahl sees this as a continuation of the same flawed thinking that led to the crisis.
Prioritizing the interests of the financial elite over the needs of the broader economy.
Exactly.
It's a pretty bleak picture, isn't it?
It is. Engdahl doesn't offer much hope.
So what does he say about the aftermath of the 2008 crisis?
Well, he argues that the government's response, although it was massive in scale, it really failed to address the root causes of the crisis.
So they just kicked the can down the road?
Essentially, yes. Instead of fundamental reforms, he sees a continuation of these policies that just favor the financial elite at the expense of the real economy.
It's a pretty depressing thought.
It is. And his concluding chapters offer a really sobering reflection on the state of the American economy and the global financial system.
So what's his prognosis?
Well, he argues that the U.S. has become a debtor nation beholden to foreign creditors like China.
Wow, so we're living beyond our means.
Exactly. And he sees this as a symptom of a deeper decline.
What kind of decline?
Well, he argues that the U.S. has lost its industrial base.
Right, we're no longer a manufacturing powerhouse.
Exactly. And he says that our economy is increasingly reliant on financial speculation and consumer spending.
So we're basically a nation of shoppers and gamblers.
In a way, yes. And he actually draws parallels to the decline of the Roman Empire.
Wow, that's a pretty bold comparison.
It is. But he argues that Rome was brought down by excessive military spending corruption and a concentration of wealth in the hands of a small elite.
And he sees those same forces at work in the U.S. today.
He does. It's a provocative analogy.
It is. So is he saying that the U.S. is headed for a collapse?
He doesn't say that explicitly, but he's definitely suggesting that we could be on a similar path of decline.
Unless we make some major changes.
Right, unless we address the fundamental imbalances in our economy and our political system.
Well, that's certainly a lot to think about.
Engdahl's work is definitely controversial.
It is.
And some of his claims are highly speculative.
Right. But I think his analysis does raise some important questions.
I agree. It forces us to think critically about the role of finance in modern society.
And about the concentration of power in the hands of a few.
Exactly. It challenges us to really question the narratives that we're told about economic growth and prosperity.
Right. And to think about the assumptions that underlie our financial system.
Engdahl's book is really a call to action.
It is.
He's urging readers to become more informed about how the financial system works.
Right, to educate ourselves.
Exactly. And to demand greater accountability from those who hold so much power.
Because ultimately, they're the ones who are making the decisions that affect all of our lives.
Exactly.
Well, I think this has been a really fascinating deep dive.
It has.
It's given me a lot to think about.
Me too. And I think it's important to remember that while Engdahl focuses on the American experience, his analysis really has global implications.
Right, because the 2008 crisis showed just how interconnected the global financial system is.
And how vulnerable we all are to the decisions that are made by a few powerful institutions.
So what can we do about it?
Well, I think Engdahl's message is that we need to become more informed and more engaged citizens.
Right? We can't just sit back and let these things happen to us.
Exactly. We need to understand the history of money and power.
And we need to be willing to challenge the status quo.
To demand a more just and sustainable future.
Well said. I think that's a great note to end on. Thank you so much for joining me on this deep dive into William Engdahl's Gods of Money.
It's been my pleasure.